In today's video, I'm going to teach you how to compare two QuickBooks Online reports for meaningful accounting insights. By the end, you'll know exactly how to pull two reports, export them, line them up side by side, and spot the differences that matter. First, log into your QuickBooks Online account. Once you're in, head to the Reports section. This is your hub for financial snapshots, trends, and drill down details. For our example, we'll start with the profit and loss report, but you can choose any report that fits your analysis. Open the report and make sure the date range and accounting method match your objective. Consistency is key. If one report is on cash basis and the other is accrual, your comparison won't be apples to apples. When the first report looks right, export it. Use the export icon at the top right and choose Excel if you plan to manipulate data, or PDF if you just need a static side-by-side view. Name the file clearly so you know which period or version it represents. Next, generate the second report with the parameters you want to compare. This could be a different date range, a different location or class, or a different version of the same report. Again, confirm the settings match the first report's structure. Export or save this second report the same way using a clear file name so you can distinguish between the two. Now it's time to compare. If you export it to Excel, open both files and place them side by side. Align the columns, ensure the same subtotal structure, and check that totals match the same lines. A quick tip: freeze the top row and the first column to keep headers visible while you scroll. You can also use simple formatting to highlight differences, like applying conditional formatting to flag rows where values don't match. If you prefer to stay in QuickBooks, use the built-in customization features on the report, such as adding a comparison period, showing columns by month or quarter, or displaying percent change. These options make differences jump out without extra file work. Finally, analyze the variances. Look for unusual swings in income or expense categories, timing differences between periods, or misclassified transactions. Large increases might reflect growth or price changes. Sharp drops could point to missing entries or seasonal shifts. If something seems off, note the exact line and amount so you can investigate further in your accounting workflow. That's it. You've logged in, pulled two reports, exported them, compared them side by side or within QuickBooks, and reviewed variances for insights you can act on.